Good day everyone, welcome to Earthgyan. In this video, I'll discuss about an NRI who's planning to accumulate $1 million before coming back to India in a few years. His question is if that money will be enough given the lifestyle he's targeting. My name is Shayan Sharkar and I am the author of Earthgyan. Earthgyan is a website providing you with the right knowledge, tools, and one-to-one guidance to create, manage, and execute your portfolio. Before getting started, please put in a comment below as to what you think about the money being enough to have a certain lifestyle in India. Also, please click the link in the description section to join our WhatsApp channel to get notifications about the site content and upcoming webinars. Let's go. So here I'm going to lay out the scenario. They already have the city planned out where they want to return. The reason for that is they have a debt-free own house. They're currently abroad and have been there for more than a decade. It's a family of three, father, mother, and son. Plus, they have one dependent parent. The child will be around 12 years old when they come back a few years from now. So there's a particular lifestyle they're targeting, and which they want to have once they come back. First and foremost is travel. So one foreign travel trip and 2 to 3 domestic trips is what they're looking at. Uh, Decent luxury vehicle, which is similar to what they have abroad, which would cost more than 80 lakhs in India. That's one more thing. Plus the usual trappings of eating out and all that. So that's what they want to target. So that's their target lifestyle and their requirements. Now let's come to the if I go into granular details. So what I've done is I've split these into various goals. So let's write them down one by one. So early retirement from year 2029 for 55 years. So here I've assumed longevity of the younger spouse up to age 100. So while longevity figures of for India are in the 70s right now, but I'm quite confident that given the time horizon involved here, there would be sufficient advances in medical science to for many people to live till in the 90s or even beyond that. So the portfolio should last until then. Here, luxury is an important factor in the lifestyle. So I've created a separate travel fund for both domestic and international travel, and I have mapped out the luxury vehicle purchase separately as a different goal. I've kept the child's education goal expense plus school expense and all that separate from the early retirement. Plus, I've specifically added a line item for the elderly parent as well. So if I just write this down, so we have the early retirement, we have the lifestyle, we have the travel fund, we have the child goals, and the elderly parent. So this is where we are in terms of the requirements of the investor. So what we'll be doing is we'll use the Earthcan goal-based investing tool, so which will allow us to create this model, and I'm going to take you all through it one by one. So very quickly, this is what the tool looks like. I'll leave a link to the current version of this tool in the description section. But as a disclaimer, this is a paid tool. You can use it as is, but if you want to make any changes for your own situation, you have to get a license. So here's the button that will help you get a license. Otherwise, the calculations will not work. So these numbers are currently hard coded, but when you change them and you want to use them for your own calculations, you have to get a license for the calculate button to work. So let's look at the assets. I have assumed around 6 crores in US fund, which they have right now. It's a simple S&P 500 ETF. And I have assumed certain goals. I'm going to take you through them one by one. Some assumptions about inflation, SIP increment, which they need to invest. Uh, Early retirement starts in 5 years. Average debt and equity returns here. I'll make it a little bigger. Yeah, average debt to equity returns years to retirement is all that covered. So I'll quickly go through all of the goals separately. So what I've done is I've specifically made a line item for the luxury vehicle. So that's 85 lakhs in today's money. 5 years from now, it will grow to almost yeah, more than a crore. So at 5% inflation, which is fine. I've written down the foreign vacation line item here as 10 lakhs. So that's there for the next, for starting from 5 years, 6 years from now, going for another 20 years. So total 20 years of foreign vacation I've mapped out here. I've added the kids' expenses, so school admission in India plus annual expenses to until college. The child will be 12 when they comes back, so that's how this has been mapped. Plus UG costs of around 2 crores, sorry, 1.5 crores. Um, that includes all the 4 years plus admission and everything else. If they want to buy a house for their kid, so 50 lakhs there and modest 10 lakhs for marriage. And the time horizons have been mapped out accordingly. So that's for the child. So for the elderly parent, I've added a modest line item here for this period for starting 5 years from now, and it will go on for 20 years. And this is their FIRE goal. So this is year one before retirement and so on. So since their FIRE is 20 years from now, the retirement is 20 years from now, but they want to FIRE 5 years from now. So that's accordingly I've put in those numbers. So I've assumed a lifestyle of 15 lakhs in India in today's money. The tool will handle the inflation automatically. So this is entirely mapped out for this whole period, 40 years in retirement, starting 15 years from now. So total 55 years have been mapped out. So this is how the goals have been set up and assets I've covered. So what once I've done that and I've hit calculate, this is the result that came out. I'll quickly take you through this. So for each of the categories, kid, retirement, early retirement, lifestyle, and parent. So I have this SIP numbers. So that's what 10 lakhs in INR, and in USD it's 12,500 USD. That's what they need to do. So their retirement goal is the one which has not been funded yet. So that's the least amount of funding is there for the retirement goal, but their fire, lifestyle, parent, and kids goals are mostly funded. So that's where they are. So their main focus, 80% of the SIP from now onwards will go into their main retirement goal, which will be 20 years from now. So they have a corpus of around 6 crores. That's in today's money. And their retirement corpus is 20 crores. The model has calculated that. And they all, once they come back to India, they would also need to have a life insurance policy of around 7.5 crores at the family level. So between husband and wife together, if the wife is also working, that is together, they need to have this much amount of coverage. Their goals are, like I said, is not completely fulfilled. So this is the main thing. The retirement goal is left. So they are 42% of their way complete, and their asset allocation, this is their the current asset allocation is unknown. I'm assuming this to be all equity, but the target asset allocation is captured here. So this is equity, debt, and cash. So this model will show you what is going to be the exact equity and debt allocation and cash allocation going forward. So SIP between equity and debt is also captured, split, and this is the target asset allocation. So here's the important bit. So between these three buckets, equity, debt, and cash, the model has split this into various time buckets. So 5 years or less, 5 to 10, 10 to 15, 15 plus. What would be the allocation into various buckets? So 5 years or less, there's a substantial cash allocation for the goals that are happening in the near future, and equity and debt allocation. So mutual funds can be used, and for example, goals which are further away, it can be in higher risk mutual funds. Goals which are medium term, 10 to 15, can be in medium risk mutual funds, and goals which are closer, they can be slightly lower risk mutual funds. That's in equity, and same for debt as well. So all that can be mapped out. That's what this tool is showing you. So this is at a high level what this calculator can do, and it would help out in a situation like this. Here's the more important bit is the person wants to work once they come back to India. This is sort of like the definition of the concept of BaristaFIRE, where they come back. I mean, when you are retired, rather take an early retirement, but you do hold some kind of a low stress job. It's not much, but it's going to keep some amount of income coming in. So that's what I've done. 15 lakhs of income I've added starting 6 years from now, for around 20 more years from there. So this can be anything like a professorship in a college or something similar to that, teaching job or consultation on all that can be done. So this actually supplements the income, and the model handles this. So for example, so this is currently built in, and the calculation I'll just show you. So if you remember, this is, let's keep this figure in mind. 10.66 lakhs, 10 lakh 66,000 is the SIP. If I take this out, if I take out the BaristaFIRE income, so this goes to zero, and then this will go up. I'll just recalculate and show you. I'll take a sip of water while this recalculates. Yeah, so this will calculate, and any second it will give the output. Yeah, so instead of 10.66, it has now gone to 12.78. So that's a substantial jump that has just now happened because of this income source not being there. So, which is the reason why if you are targeting a particular lifestyle and if your corpus is not sufficient, then obviously it will require you to have some sort of income even after you take early retirement. It need not be your actual day job which you do currently, but it can be something less stressful, and that's the right definition of BaristaFIRE. So that's how this calculation works. I'll go back to the presentation. So this I've explained. This also I've explained. So this is what the portfolio looks like over time. Let's just quickly review this. I said this is for 55 years. That's what this shows here. And this is where the growth happens. Uh, and then this is the first drawdown that happens due to the vehicle purchase. Then it goes up here, the kids goals. So this is the vehicle purchase, and there the kids goals are there, etc. And the portfolio grows like this up to a particular point, around 50 55 crores it grows to, and then it starts dropping rapidly and comes to zero. So the way this portfolio is constructed, it becomes zero at the end. And so you can see this is the period where they're in full retirement. So that goes on till around 55 years. So that's how it works. Some small nuances. I'm going to quickly cover them. What if they want to work for a little longer? They have like say half a million or 600 or $700,000 right now, and they want to work till $1 million of net worth. So obviously, the whole things get pushed out, let's say, a few years, and but in that case, it is likely that their expenses will also increase, not just due to inflation, but due to lifestyle inflation. So that's another consideration. So the model has to be recalculated based on that. Next comes to US visa status with green card and without green card. So there are some nuances around taxation and estate taxes. So if you are a green card holder and or if you even have a US citizenship, so if you're a US citizen, then estate taxes, the limit is around $13.99 million for next year. But if you're having the H1B, all that, then and you have substantial US assets, you need to keep in mind that the estate tax limit is only $60,000, and above that you have 40% estate tax. So that's another consideration. Last bit, which is most important, is the kids' educational goals. I have provided 1.5 crores for that in INR. The trouble here is that's sort of like a wildcard figure. You can't really estimate today what's the kids going to be or what kind of degree they're going to get. Like for example, if I take the example of medical, so medical, depending on your NEET score in India, it can cost a few thousands, or say maximum 1 lakh if you go to AIMS in Delhi. If you don't get that, private government college will cost you 10 15 lakhs at most. A normal government college 10 15 lakhs, a private college would be say 60 70 lakhs. Paid seat in a private college will cost you 2 crores. So there's really no limit to what an additional degree can cost. So that's a wild card that's always there. And whenever you're doing fire calculations, so kids education is something that you need to separately monitor and create a portfolio for that, otherwise it will not work. So those are three main things I wanted to cover. So yeah, it's doable based on the lifestyle and whatever expenses they plan to have. Having a house obviously makes a lot of sense. They don't have to specifically allocate. And getting capital into India, investing that is tricky because based on their visa situation, the citizenship situation, and whatever assets they have specifically in IRAs and all that, or in their brokerage accounts, because taxation and all that, social security up to 15 and a half, do they keep it till then, take it out before then? So those are the considerations. The links in the description section that will allow you to contact me if you have similar queries on this topic. Plus I said WhatsApp is there. I've left a link to the model itself in the description, which you can then use. There's an article that describes all of this, which I've just spoken about, in also in the description section. That's from the website, and you can utilize that article and learn more about exactly how this thing has been formulated and what exactly needs to be done. That's it. Have a great day, and I'll see all of you in the next one. Bye bye.